Happy Monday, traders, and welcome to a fresh weekend markets. Okay, so the big news that the market got just before the open for the week was that the war between Iran and the US is officially over. So it looks as if they've come to an agreement, and there will be a signing ceremony on the 19th of June, which is on Friday. In Switzerland, probably in Geneva, just to sign off on, obviously, this deal. So look, it is big news, the fact that we are now getting a permanent end to the military conflict, something that obviously, market has been trading for some time now, whether, it's been wars on, wars off, wars on, it's off. So finally, we can put this behind us. And look, yes, it is positive news, obviously, and markets are opening the week very bullish and in a very positive manner. So look, the market that matters, obviously, is crude. Crude oil is down about 4% in early trading so far, and we're trading down towards $80. So last week, crude oil came off about 6% on, obviously, that there was positive headlines that this was going to happen. But if we have a look at the highs for crude during the first stages of the war, we went up to $120. We're now down towards $80, so we're a good $40 from the highs from when the war initially started. So look, one thing that Trump and the US have done exceptionally well is that they have kept a lid on crude from spiking aggressively. Every time it was above $100, they somehow managed to get it to go lower. And here we are down at $80. So look, they've done a fantastic job in keeping crude contained. But look, I would suggest though, chasing crude fresh short at current levels may not be the best trade. Crude oil, as we just said, it's down a good $40 from the highs. And one of the things is that obviously is that the supply of crude is not going to go back to pre-war levels anytime soon. So crude will trade at some sort of higher premium for some time until we get that supply back to pre-war levels, which may not happen until early next year. So where is that floor? Look, I'd suggest it's probably somewhere above $70, around maybe 75-ish. So again, yes, look, a lot of the good news certainly has been priced in for crude. Can it go lower? Yes, but I don't think there's a big trade fresh short from current levels. In any case, it is a massive positive for the global economy, for inflation, for central banks, and obviously in markets in general, the fact that we are getting a lot of relief from lower crude. Okay, so another market that matters is obviously US bond yields. US bond yields spiked aggressively during the war. US 2-year yields, went up to almost 4.2%, and they were trading down below 3.5% pre-war. They closed on Friday around about just below 4.1%, around about 4.08. So we haven't seen yields open yet, but no doubt they will trade lower once that happens. But it's interesting just to see how low they go. Obviously, market will want US 2-year yields back below 4%. And 10-year yields are still very elevated as well. They're trading, they closed on Friday around about 4.48%, so near 4.5%. They were trading sub 4% pre-war, so they are still very, very elevated. Again, no doubt we'll probably see those 10-year yields lower. How much lower? Let's see. But the big event for US yields and rates is going to be the Fed meeting this week. So that's going to be early Thursday morning Sydney time. It's also the first meeting for the new Fed chair, Ken Walsh. So no doubt it's going to be the biggest event risk this week. So market certainly is going to be very interested to see how Ken basically handles his first meeting as Fed chair. Market pre-war was still looking for rate cuts. They priced that out during the war, and then recently with inflation going up, headline, up to 4.2%. Market is starting to look at potentially that the Fed could raise rates before the end of the year. So yes, just seeing how Ken handles this meeting and whether or not he looks past this inflation spike and says that now that the war is over and expects crude lower and that inflation now should be contained. And if for whatever reasons that he does handle the meeting a little bit dovishly, look, markets are going to love that. But if he isn't as dovish as maybe what the market wants and potentially keeps the door open for a potential hike at the end of the year, no doubt then markets will not appreciate that hawkish stance. So look, Thursday, 100% is going to be a big risk event for the markets, and what happens to yields is going to be super important as well. US equity markets, look, they've been on an absolute bull run. Even regardless of the war, they went exponentially higher in a straight line. Also on Friday, we had the SpaceX IPO, the world's biggest IPO. It was IPO price came in at $1.35. It opened at $1.50. So a good 11% stag profits for anyone who was an initial investor. And we did trade up to around $1.65. So it was a sensational launch for the biggest IPO in the world. Obviously that helps US equity markets. It's not like they needed help, but that's another thing market is going to be focused on this week, is to see how SpaceX continues to trade. No doubt if SpaceX continues to go up, it's going to take equities, S&P and NASDAQ up with it. But there are some analysts that think that this IPO now, SpaceX being valued market cap of over $2 trillion is way too much. So there is part of the market that is expecting maybe SpaceX to trade lower and maybe substantially lower. So let's see. But that is something to watch out for this week. The currency markets really haven't seen. We've seen some US dollar selling on the open with this risk-on move, but we haven't seen any big moves yet in the currency space. Market does want to sell US dollars, no doubt. But they're going to need to see US bond yields lower. So again, I think that the key for the currency market is going to be what happens with this Fed meeting. And no doubt, obviously, if it is dovish, then market will be more than happy to sell US dollars. But at the moment, the current bias obviously is to be selling dollars. Aussie's a risk currency. Aussie's sub 71 cents. It's a long way from the highs that we saw this year, up towards 73. So if there was a currency I'd be looking to buy with this risk-on move, it's no doubt it's probably the Aussie. Precious metals, they did not have a good time during the war. We had gold trade off almost down to 4,000 last week. Silver almost down to $60. So we saw some huge moves lower in precious metals. And for two reasons, is obviously they don't like yields higher, and they also don't like the stronger US dollar, which we saw during the war. Now we're getting some relief, obviously in the open, and gold's pushing back up towards 4,300. Big resistance levels there is around about 4,400. So if gold does start closing above 4,400 again, it's going to look in much more bullish light than it is at the moment. But no doubt at the moment, gold and silver both and silver's back up towards $70 at the moment, getting some relief, and buyers are coming back into precious metals. And Bitcoin as well, which did briefly trade below 60,000. So we've obviously seen there's solid support at 60,000. We're back up towards 65, but it was one of the weaker links in markets in that it was selling off quite aggressively during the war. So we're seeing some buying interest come back in there. Could it be some value still at current levels? I'd say that it's probably like the Aussie. Maybe it's one of the ones that you might look at having a cheeky long. But in any case, look, key takeaways, markets are starting the week, obviously. Risk on, the war's over, signing ceremony on Friday. But look, a lot of it has been priced in. It is not new news. We've been told the war's been over for quite some time. Market did trade it all of last week as well. Maybe chasing markets may not be the best bet. And then also the other key takeaways, obviously Thursday with the Fed meeting is going to be the big risk event this week. Good luck with your trades. We'll check back in with you shortly.